Top story we are tracking. The GST Council is in a huddle currently. The meeting is the first one after Prime Minister Modi promised a simpler GST regime and went on to say that 99% of items will soon be under the 18% tax slab or even below that. The meeting is also the first one after the Congress's revival in the Hindi heartland. The 31-member council has 14 non-BJP members now after the recently concluded assembly polls. We are given to understand that the council is likely to discuss composition scheme for real estate. Sapna Das, who has been tracking that story, joins us with more details. Sapna, what are your sources telling you?
Well, first of all, I suppose on the simplification front, we can expect some further developments, something that the council is likely to approve. Basically, what we're getting to hear is that the number of tax ledgers, there are 20 odd of them as of now, and they are likely to be merged into one ledger. Now, this could be a major relief for the industry in terms of, your payments like a late fee payment or a penalty payment or the fine charges, etc. that are paid. So there are 5 subheads under the tax system, out of which 20 ledgers are required right now. So that probably may get merged into one. This is something that we are expecting as of now. So that is one aspect. Second, of course, a lot of queries in terms of what about the new simplified GST return. We have been given to understand that, that is still work in progress. The softwares have yet to be aligned. The data systems have yet to be brought up to the mark. So that's basically work in progress. I'm not very sure whether you can expect a very concrete announcement after today's council meeting on that front. Third aspect, of course, and that will be the key one that everybody is asking about, further rate rationalization, especially after the Prime Minister's statement. Well, we are clearly given to understand that that also is something that, both the centre and the states have been working towards. But there are revenue concerns which the states would like to flag off. So we have to just wait and watch on that and just see what really happens. Further rate rationalization is not ruled out, and that has always been an ongoing exercise in the past at least 15 to 20 odd GST Council meetings that you have seen. Some major rate reductions have already done. Some may further happen, but unlikely that all of those decisions are going to be bunched together and one big announcement will happen. That's my sense as of now. Last but not the least, and this could be very important, possibly some discussion on a composition scheme for the real estate sector. We have seen that happening in for the restaurant market. Something of that kind may emerge. So that item is very much as part of the GST Council's agenda today.
Right. Sapna, thanks for getting us those exclusive details. Sapna Das, on the expectations from today's GST Council meeting. Now, as we told you, the meeting is currently underway. Here are Kerala's Finance Minister Thomas Isaac and Haryana Representative Abhimanyu Singh speaking to the media as they were going in for the GST Council meeting.
दरों का एकीकरण करने का प्रयास, यह शुरू से ही हमारा जीएसटी काउंसिल का एक लक्ष्य रहा है और उसी दिशा में भारत के प्रधानमंत्री जी भी यही चाहते हैं कि जीएसटी की दरें वह 18% के आसपास हों। अधिकतम जो जीएसटी के दायरे में आने वाली सेवा और वस्तुएं हैं वह 28% में अब न्यूनतम जो मिनिमम है वही केवल रहें तो अच्छा है। तो जीएसटी काउंसिल इस भावना को भी ध्यान में रखते हुए और देश और प्रदेश के सभी जो प्रतिनिधि हैं वह जनता के हित में दलगत राजनीति से ऊपर उठ करके हम फैसला करने वाले हैं।
There are not very big proposals for rate reduction. It's only tweaking of the rates and rationalization. That's what I understand from the agenda notes. But there is a serious proposal regarding reducing the works contract service tax to a lower limit without ITC, which I do not know what is the revenue implication. One has to carefully look at it to ensure that it is revenue neutral, the change proposed. Otherwise, it's routine clarifications and so on. Large number of appeals have come, and the GST Council will be approving the clarifications that are given by CBCI and so on.
Is there a reduction in the prices of the GST on cement too, sir?
No.
We'll certainly keep you posted on the GST Council meeting. But let's now get you the big international story we are tracking. The US government officially shut down a few hours ago after Democrats and Republicans failed to arrive at a consensus. President Donald Trump wanted $5 billion for a border wall, which Republican Party failed to whip votes. In a video message posted on Twitter just hours before the shutdown, President Trump said, and I quote, "We are going to have a shutdown. There's nothing we can do about it because we need the Democrats to give us their votes. The shutdown hopefully will not last long," end quote. Senior Democratic Party leader Chuck Schumer said, and I quote, "President Trump has thrown a temper tantrum and now has US careening towards a Trump shutdown over Christmas. You're not getting the wall today, next week or on the 3rd of January when Democrats take control of the House," end quote. Now, the government shutdown, along with fears of no trade deal with China in the stipulated deadline, US markets nosedive as much as 800 points off highs to end the worst trading week since the 2008 crisis. CNBC's Eric Chemi gets us the lowdown of the trading action on Wall Street.
For CNBC TV18, I'm Eric Chemi. U.S. stocks sliding late in the trading session with the Dow off 414 points, the S&P down 50, and the Nasdaq lower by 195. The U.S. economy grew less than previously estimated in the third quarter. Gross domestic product increased at a 3.4% annualized rate, the Commerce Department said on Friday in its latest reading of third quarter GDP growth. That was slightly down from the 3.5% rate it had estimated in October. Meanwhile, White House advisor Peter Navarro telling a Japanese newspaper that he doubts a U.S.-China agreement will happen in the next 3 months. That helped push stocks to session lows. Navarro was also critical of the Fed's interest rate forecast for 2019. And General Motors has hinted that it could negotiate a way to keep one or more of its plants open. Last month, GM announced plans to halt production at 5 North American plants. But now the company is saying those closings are a matter of negotiation. The automaker has been the target of public outcry since those plans were announced. Although the stock is up about 5% over the past 2 months, that's well outperforming the broader market. That's the action from the U.S. market. Back to you in Mumbai.
Let's focus on Jet Airways, which has got a fresh lease of life. CNBC TV18 learns that the Jet Airways board is likely to have already cleared soft loan guarantee of $150 million. We learned that Etihad will stand as the guarantor. Kritika Saxena joins us now. Kritika, what else are you picking up?
Well, the Jet Airways board met yesterday to discuss the possibility of fundraising, of consolidation, of cost-cutting measures. So they were largely meeting to take stock of the situation at present, but they did clear one point. Now, Jet Airways board has cleared bringing on Etihad as a guarantor to bring in fresh loans. What does that mean? Jet Airways is going to get a fresh soft loan of about $150 million, but Etihad is going to be the guarantor here. So at a future date, if there was a point where Jet Airways is unable to pay this, Etihad stands as the guarantor and they will have to foot the bill if there was a situation that were to arise. Now, $150 million is the amount that they're looking at. Etihad has spoken to 2 foreign banks and is likely to bring in at least 2 banks to fund this. We understand that now that the formal nod of the board has come in, they will start the process, the due diligence will begin, and they hope to conclude this in the next coming weeks. So that's as far as the soft loan guarantee is concerned. The other point is the equity infusion. So far, the talks have slowed down with Etihad, but they are continuing. So 2 points over here. One is the local partner coming in. There seems to be a little bit of a hiccup there. 2 local partners that Etihad had identified have backed off. Second is who is going to be in control. What happens when the deal actually goes through? The talks with Tata Group have been slow for a long time. They have discussed it in the board and discussed if they should perhaps call it off altogether or delay it or go back to the drawing board. And as far as the cost-cutting measures are concerned, $40 million saved so far, and they want to continue the cost-cutting measures going forward.
Right, Kritika, thanks for that. On to a CNBC TV exclusive from the deal space now. Bandhan Bank, which is in violation of RBI's promoter shareholding norms, is looking at merging a housing finance company, Grow Finance, with itself as a step to reduce promoter stake. Nisha Podar joins us with the details. Nisha, tell us more about the bank's plan.
So sources with direct knowledge and 3 independent sources we spoke to have told CNBC TV18 that Bandhan Bank is in talks with HDFC Limited to buy out Group Finance. Now, we do gather that this particular acquisition could be through a merger process. So they may be acquiring Group Finance and merging it with itself. And that will also help Bandhan Bank reduce its promoter stake right now, which is over 82%. And as per the RBI guidelines, it has to be brought down to 40%. Now, we know that Bandhan Bank is already in violation of the RBI norms in terms of promoter shareholding in the company. With this particular deal alone will not really help in the overall stake dilution of the promoters. Remember, it could come down to about 60% as per the current market valuations, but another 20% will have to be done through other means by Bandhan Bank. So that's about Bandhan Bank. As far as HDFC Limited is concerned, remember it owns about 57.5% stake in Group Finance, and it could be looking at selling it off by way of merger with Bandhan Bank, which could give them close to about 15% stake in the merged entity in the bank, which is not allowed unless RBI gives a special approval above 5% stake. So there again, HDFC Limited may look at some investor tying up with an investor for the rest of the stake as well. So these are the 2 important aspects to be looked at. But net, what Bandhan Bank could be doing in order to get a step closer to complying with the RBI norm, which it has already violated on promoter shareholding, is acquiring Group Finance, merging it with itself, and on the other hand, also getting a low-cost housing finance company with itself. All the 3 companies have really not responded to a CNBC TV18's query.
Right, Nisha, thanks for getting us those details of the deal. Let's get you the big political story now. The Ministry of Home Affairs has issued a notification giving 10 government agencies sweeping powers to spy on any computer in the country. These agencies include the Intelligence Bureau, Narcotics Control Bureau, Enforcement Directorate and CBI, among others. According to the notification, the subscriber or service provider or any person in charge of the computer resource is bound to extend all facilities and technical assistance to the agencies. Failing this, they can face 7 years in jail and a fine. Parikshit Luthra is here with all the details. Parikshit, what does this mean and what are the reactions coming in from the opposition?
Well, we're looking at very angry reactions coming in from the opposition. We've seen the likes of Ahmed Patel, P. Chidambaram, Asaduddin Owaisi, Mamata Banerjee all speaking out and asking if this government wants to turn India into a surveillance state. Chidambaram even went to the extent of calling it an Orwellian state. Having said that, the government is trying to play down this controversy. Last night, there was a notification from the Ministry of Home Affairs which empowered 10 intelligence agencies, 10 central agencies to intercept and monitor and decrypt any kind of information being stored or transmitted from any computer in the country. So this was the notification that really sent alarm bells going. Today, after coming under pressure from the opposition, the government has come out with a series of notifications, series of clarifications saying that this is nothing untoward has really happened. This is same as it was earlier. The Ministry of Home Affairs still remains a nodal ministry and its approval would be needed in every individual case. It does not give sweeping powers to anyone. So this is the clarification coming in. But the whole question is, if it was so simple, why didn't the government explain it better in the first place?
माननीय सुप्रीम कोर्ट ने भी अपना निर्णय दिया है कि जो राइट टू प्राइवेसी है, निजता का अधिकार है, वो मूल अधिकार है, फंडामेंटल राइट है। देश की 9 एजेंसीज को और दिल्ली पुलिस को एक स्वीपिंग पावर दे दी गई है एक एग्जीक्यूटिव ऑर्डर से कि वो किसी का भी हर जानकारी, हर टेलीफोन, हर कंप्यूटर उसको इंटरसेप्ट करे, उसको मॉनिटर करे। कृपया अपनी बात संक्षिप्त में रखें। एक मिनट, ये भारत को पुलिस स्टेट बन जाएगी, ये स्वीकार्य नहीं है।
पिछले 18 वर्ष पहले इंफॉर्मेशन टेक्नोलॉजी एक्ट आया। उसके कानून जब आनंद शर्मा जी मंत्री थे तो 2009 में यूपीए सरकार ने बनाए कि कौन सी एजेंसीज होंगी जिनको ऑथराइज किया जाएगा। कोई भी व्यक्ति नहीं कर सकता, किसी भी फोन या कंप्यूटर इंस्ट्रूमेंट को नहीं कर सकता जिसका संबंध नेशनल सिक्योरिटी, पब्लिक ऑर्डर, इंटीग्रिटी ऑफ इंडिया के साथ खिलवाड़ या खतरे का है, तो ये ऑथराइज एजेंसीज हैं। तो तब से लेकर जब से एक्ट बना These orders of authorization are repeated from time to time. 20 दिसंबर को वही ऑर्डर रिपीट हुआ है जो 2009 से आपकी सरकार के समय से आज तक चला आ रहा था.
ISIS is recruiting young gullible Indians through radical platform on their internet. Should all this be allowed to go scot-free? Or should unauthorized people should allow to intercept? No. Now a structured notification has been issued by defined Government of India authorities who have to undertake this task only with the approval of Home Secretary.
It's time now for our Rewind 2018 special. As the world marked the 10th anniversary of the collapse of Lehman Brothers and the start of the global financial crisis of 2008, a new crisis emerged in India. Infrastructure finance company IL&FS defaulted on payments to lenders and triggered a panic in the Indian financial markets. CNBC TV18's Timsy Jaipuria and Yash Jain recount the fallout.
The 1st of October 2018 will not be soon forgotten by anyone tracking the Indian financial markets. On that day, the Ministry of Corporate Affairs moved the NCLT seeking to supersede the Board of Infrastructure Leasing and Financial Services, or the IL&FS Group, one of the most trusted names in the financial services and infrastructure space.
The Corporate Affairs Ministry's move took many by surprise, but it was not a decision taken overnight. The trouble for IL&FS began almost a month earlier on 4th of September when it came to light that IL&FS had defaulted on a short-term loan of 1,000 crore rupees taken from SIDBI. At the same time, a subsidiary of IL&FS also defaulted on a 500 crore rupee loan taken from the Development Finance Company.
This sent shockwaves through mutual fund houses and brokerages, which cumulatively held IL&FS bonds worth over 11 lakh crore rupees. Shockwaves because IL&FS enjoyed a credit rating of AA+. Ratings agencies jumped to correct their assessments. Pointed out that apart from the liquidity pressure the company was facing, it was also laboring under a debt burden that had doubled in the last 4 years between 2014 and 2018 and stood in excess of 91,000 crore rupees. Over 57,000 crores of this was owed to public sector banks. IL&FS and its subsidiaries continued to rack up defaults both on debt and interest payments, and the IL&FS Group went into emergency damage control mode.
Only way in which we can actually honorably and in a transparent fashion repay our creditors is to be able to sell our assets in a calibrated, orderly fashion. And that's our focus. The intrinsic value of these assets has to now be discovered through a very calibrated, orderly asset monetization plan. We feel confident, based on the kind of assets we have created, that we should be able to service much of the creditors that we have taken money from to build these assets. So that's the real plan. The plan is to create an asset monetization plan that results in unleashing value and cash flow to repay creditors.
The government, however, was not waiting to see how that plan played out. Armed with an order to supersede the IL&FS board, it nominated a brand new 6-member board led by Uday Kotak, who was elected chairman. Members included Vineet Nair of Tech Mahindra, who was named vice chairman and managing director, former SEBI chairman G.N. Bajpai, former ICICI Bank chairman G.C. Chaturvedi, and former IAS officers Malini Shankar and Nanda Kishore. This board promised quick action on reassessing the group's assets and liabilities that would then form the basis of a revival plan.
Each of us as directors are humbled by the responsibility placed by the government on us, and we truly consider this as a national duty. With a view to preserve value, the board will take necessary steps with respect to the company and its subsidiaries, joint ventures and associates. The board was made aware that there are 348 entities as a part of the group. 348 entities as a part of the group, significantly larger than what we had originally been aware of. And this underscores the task at hand.
It is quite possible that some of the units of ILFS can actually be sold as going concerns.
Okay.
But that may be a few.
Okay.
In many cases it could be an asset sale, in some cases it could be a slump sale,
Right.
and in some cases it could be just winding up.
The MCA meanwhile ordered the SFIO to see if any fraud had been committed at the ILNFS group. On the 3rd of December, the SFIO's interim report to NCLT alleged that ILNFS executives, including former chairman Ravi Parthasarathi, window-dressed financials.
The problem did not end with ILNFS books. Defaults by ILNFS and its various group companies led to a massive sell-off in the shares of various housing finance as well as non-banking financial companies, opening doors to a major crisis in the Indian banking system and creating ripple effects through the Indian economy. Now, as the calendar year turns to 2019, the new management at the ILNFS group will have the task to draw out a resolution plan for the group, but the going looks tough as it still struggles to assess the assets and liabilities of the group. As far as the old management is concerned, they have a long legal case to look forward to, provided the SFIO or the Serious Frauds Investigation Office puts forth a strong case against them.
And with that, it's a wrap on this edition of Business Saturday. Thanks for watching.